All right, welcome back to another episode of the Black Bullion Show on goldandsilvertoday.com. The stress ratio may be heading up in the near future, but don't be fooled by the rising copper and lower gold prices. The best way to read the copper to gold ratio, honestly, is by watching its longer term trend. So does that mean what we could see in gold prices dropping may be a fleeting moment? Well, possibly. Does that mean that the rising copper prices may be flashing a false signal of global recovery? Well, possibly. But before we get into all that, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so yesterday I spoke about gold possibly forming a bullish long-term formation of a cup and handle. I won't get into too much of that detail here on this video, but what that could mean for gold prices, as we form the handle portion, is that we may drop before we pop up to the upside. And without saying to as much, specifically about the cup and handle explicitly, a bank seems to be forecasting the same thing that I am saying right now, and that is Credit Suisse. Gold price could touch 1765 before reversing towards 2300. So let's see what they had to say here. If short-term downtrend continues for longer than expected, prices could tumble to 1765 and even 1726 an ounce, the bank added. Should weakness extend? Well, basically that's saying the same thing. Long-term, Credit Suisse is bullish on gold, seeing a potential upside to 2300 an ounce. We look for an eventual move above 2075 with resistance seen next at 2175, then 2300. Whilst we would look for a fresh consolidation at this latter level, a direct break can see potential trend resistance at 2417 with scope seen for 2700 or 2720 over the long term. Now, this sounds like a pullback and an extreme upside jump that would be characteristic of a completed cup and handle, again, that we talked about yesterday. And if you need a bit of a reminder on that, check out goldandsilvertoday.com with yesterday's article, a case of the Mondays. But going back to the stress ratio, its overall downtrend is still in play. If the cup and handle forms and, Credit Suisse is correct, then, we're going to get that downtrend. Now, check this out. Since 2006, this ratio has essentially been heading down. And yet, as you can see here, there are moments of, when it pops up here. But overall, the trend is downward. And these, random spikes up, we currently are having one right now. That's what I like to call a false signal, because we essentially just reverse every single time and continue going down. Now, guys, we talked about gold's minor false bearish signal. What about copper? Well, if we take a look here, overall, I do think copper prices will naturally rise with inflation. However, what we currently are seeing is a demand coming from China, but even greater than that, a supply squeeze from Latin America driving up prices. Now, check this out. Quote here, I think we're in for some range-bound trading because markets are really torn between the strength of Chinese demand and the supply side disruptions. So I think this minor uptrend in the copper to gold ratio will be short-lived and the overall downtrend will continue. But guys, let me know what you think in the comment section below. Thanks again for watching. Hit that like button. Please subscribe if you're new. It's Black Bullion on goldandsilvertoday.com.